It's a continuation, I guess, of what we're seeing here, although I think it's going to get a lot worse a lot faster because of the global debt situation here. We have a global economy that's in a lot of trouble. We have a global debt issue that seems to be insurmountable. It's only going to get worse. Unfortunately, the middle class is continuing to be squeezed. I don't care where you are in the world, anywhere. It's going to be a struggle for people moving forward here with regard to on multiple levels. But understanding these issues really shouldn't be a downer for people. We have to take in the entire situation. It's not that hard to understand, and then look for the best places to put our cash to work, or at least to preserve something as we move forward. I think there are a lot of opportunities here, honestly. With regard to equity markets, it all depends on monetary policy by central banks, what they're going to continue doing moving forward. Also, the law of diminishing returns applies here. But with regard to opportunity in suppressed assets, and even in cryptocurrencies as of late, we've seen a pretty big drop. I think there's a lot of opportunity here. There's not a single economic policy being put forth right now here by President Trump that's going to help the middle class at all here in the United States nor around the world. And the widening issue with regard to tariffs and reciprocal tariffs is nothing but a tax that people are going to have to pay on top of the disappearing act with regard to the currency purchasing power as central banks dissolve it moving forward. And they still have to deal with the people of the middle class of the world, issues that have been in effect. I mean, with regard to currency purchasing power destruction, artificially suppressed rates, market rigging to the highest possible order, it just is not going to stop. And it's leading us into a grand finale. But I think there are solutions to this. The main solution is to return purchasing power to the currency. That would mean we need higher rates around the world dramatically. And of course, this would be not very good for equity markets or stock markets of the world. In fact, we're in a multiple bubble and inverse bubble environment. And all of this has been built on the back of artificially suppressed rates and currency purchasing power destruction. And that's the root cause of the problem, why the world economy is the situation that it's in right now. I would say it's in its death throes right now. People don't understand. The same mechanism that has kept the stock markets propped up is the same mechanism that has destroyed the middle class and the economy of the world. I believe the best situation here would be a controlled return or a reset, if you want to call it that, instead of what's being prepared here by central banks here. Controlled meaning, if, for example, we had a single world leader who said, okay, we need to start raising rates and let's work with the central bank to make that happen. What we're hearing in the United States from President Trump, from Senator Elizabeth Warren, and from U.S. Treasury Secretary Scott Bessent is we need lower rates. And this is, of course, a wrecking machine and will be utilized, I guess, to at least attempt to keep the stock market propped up on that. But again, the law of diminishing returns applies. And the fact that the world debt to GDP ratio is so detached from any kind of reality, we can't fix it without some kind of a demolition, whether it's going to be a controlled demolition by raising rates, letting the markets play out. Again, look, what would it do to the stock markets of the world? It would cause a lot of problems here. We're going to get that either way. There's no reality. There's no price discovery. The fact that the world equity markets are nothing but a house of cards floating on a pool of gasoline. It's going to go up either in a very dramatic, rapid way, or we could choose to do it the easier way. Won't be easy, but the easier way is to allow ourselves to at least start to gain some purchasing power of the currency. And the issue is this. There's a massive lag effect. Even if, in fact, let's say the Federal Reserve or whatever central bank starts to raise rates first, it's not going to hit right away. The lag effect of that is of an indeterminate length, actually, because the global money velocity is terrible right now. We're gone nowhere here. We can't just assume that if, let's say, one world leader were to work with their central bank, say, listen, we need to return some purchasing power to the currency because this is literally the root cause of the problem. Even if they started, the effect of it wouldn't be seen for many, many, many months. And the deterioration would continue for a while. There's a humongous lag effect here. Action needs to be taken now. We can't wait anymore because we're seeing a particular dynamic in play that we haven't seen since the early 1970s, where we had skyrocketing inflation, at least here in the United States, and there's a ripple effect around the world. And that's what's going to happen again. There's no doubt about it. You have to wonder, if we know these things, how is it that politicians who went to Wharton Business School and talking about President Trump here, I'm not putting them down, it's a fact, okay, for those of you that may get triggered, and the fact that central banks, they know it too. So either this is deliberate and they're deconstructing the world economy, and again, as a mechanism to issue in a new system, which I really believe is the case, or something. Nobody wants to help the middle class here. It's an unfortunate thing. It's what we're seeing, especially here in the United States, is a move to foster what I've been warning about is going to happen for over 10 years. The creation of a neo-feudal system, this President Trump's gold card system actually allowing wealthy investors to buy essentially citizenship here in the United States at $5 million a pop, and then they get a tax break on top of that. This is exactly what I've been explaining to people is going to happen. And to see it unfolding before our eyes, extreme haves, extreme have-nots, a wipe out of the middle class, not just here in the United States, but around the world. And this mechanism is going to accelerate. There's just no doubt about it. This is also a wealth transfer effect. It goes back to what's called the Cantillon effect, where easy money, makes its way to the rich first, and then it trickles down through the economy to the rest of us. By that point, the currency has been so massively devalued that, there's no purchasing power left. And that mechanism is in full effect since the so-called financial crisis of 2008. There's no way to stop it. There's no roadblocks right now being put in the pathway of this. It's only going to get worse from here. President Trump has done some things that needed to be done, there's no doubt. But there's not a single thing that he's done right now that is actually going to benefit the middle class moving forward. And I would expect the economy to deteriorate further, faster moving forward, along with debts, deficits as well. And nothing that happens in government is by accident. It's flurry. It's out of control here. And no one can focus on what's happening. It's hitting them too fast. So they can't sit back and think about what the economic ramifications are going to be. And with regard to these federal layoffs, and I agree with President Trump on this one, this needs to be done. But I said this morning in my video, even if they cut 2/3, even more than that, potentially the jobs here in the government here, the ripple effect is not going to be contained, if I want to use that word from Ben Bernanke, with regard to at the federal level. This is going to bleed out across the entire economy to the private sector. But people aren't thinking about that. And with regard to Doge, these numbers by Elon Musk, please, people, look this up for yourselves. Don't take my word for what I'm saying about anything. He's admitted that the numbers are not exactly right. How can they put out numbers that aren't right? I don't understand that. With regard to economic data that we got today here in the United States, it's all terrible. With regard to jobs numbers coming in way worse than expected, pending home sales, the worst we've ever seen in history, as a matter of fact. People actually understood the gravity of what's going on. I think they'd be running for the hills right now, or at least trying to protect themselves. I believe we're going to see, and it's a pretty obvious thing around the world, and especially here in the United States, unfortunately, we're going to see supply chain disruptions. The availability of resources is already getting hit. Inflation is not going to stop. We, the people, if we had a backbone, could choose how we want this to hit us, either in a controlled way or in an uncontrolled way. It seems pretty obvious that a controlled way to allow the system to somewhat normalize, because there's nothing here that's real. We are going to face in an uncontrolled situation is a credit freeze across the world, a situation where the flow of credit or the flow of debt through the markets and the economy is going to stop. That's really the issue behind why we're seeing central banks inflate and politicians calling for lower rates here and more easy money, because they do realize that that's what's going to happen. And we can prevent that if in a controlled kind of a situation where people are going to feel pain across the spectrum of everything. The economy would get hit at first, no doubt about it. The equity markets or the stock markets absolutely would get hit. Real estate, you name it. There's not one asset class I don't think that would escape it. But again, I still feel that a controlled situation is better than an uncontrolled situation. You got to bet against the system. The system is being fueled with more and more debt. That means that we need to be on the opposite side of that trade, meaning we need to be in assets here that are anti-debt units, okay? I've been telling people my favorite asset of all time, and still remains, is physical silver. The second most undivided asset would be gold, in my opinion. Look, I don't sell this stuff. I have no vested interest in this, but I believe that's the best way to bet against the system and becoming your own central bank. The currency that is issued by central bank is owned by the issuing central bank, owed back to the issuing central bank, plus cash they create out of nothing, plus the interest that they create out of nothing. Okay, so that system is, we need to be on the opposite side of that. I think commodities are the way to go. With regard to cryptocurrencies, I understand that many people think, well, Greg, they're not real, they're not on the elemental chart. It doesn't really matter. I believe what we're going to see a massive flow into the crypto space as cash just seeks yield. And just understanding that the mechanism of an implosion in the debt market is going to cause bond yields to spike so rapidly. With regard to the 10-year yield, the benchmark around the world, you're going to see a spike of 20, 30, 40 basis point jumps in a day. What does that mean for the stock markets of the world? They're going to sell off so fast, people aren't going to know what happened. And everyone runs to the door at the same time. In a meltdown situation, which is what I'm talking about, everyone looks to get rid of their assets at the same time. And that presents a major problem with people trying to unload what they're losing cash on at that particular time. Like, I want to sell asset XYZ, but I'm willing to take this. So they go into their little computer screen and they put in a limit order. I am willing to sell it at this price. And all of a sudden, that doesn't work. And then they lower their limit again. They lower it again. And all of a sudden, it's a market order and they're willing to take anything for it. This is a pile driver for the price of asset prices, and people are going to get wiped out. So the commodities, platinum, palladium, crude oil, all this real stuff, tangible things, and maybe in some intangible things too, like cryptocurrencies. And this environment is not real. There's not a single asset today that has a real price discovery mechanism behind it because of the mechanism of artificially suppressed rates, currency purchasing power destruction, central banks running the whole entire show. That's kind of the bottom line. I know I'm rambling on here, but that's essentially where it's going to go. And we're already seeing the ramifications of it with global inflation. And it's not going to stop unless something acts against it, as we outlined earlier. This is exactly how it's going to play out.